All right, today we are diving deep into the wild, pretty dramatic, and, yeah, controversial launch of a cryptocurrency called Edge. It's a crazy story of explosive gains, a really angry community, and data that, well, it just didn't add up. Let's get right into it. 1,386.8%. Yeah, you heard that right. That wasn't a typo. That was the 24-hour volatility of the Edge token almost immediately after it launched, which is one of those insane numbers that perfectly captures the crazy highs and the crushing lows of a crypto hype cycle. So this is the big question we have to ask, right? Was this a flawlessly executed, super successful debut that made a bunch of early believers rich, or was it something else entirely, like a carefully constructed trap just waiting for unsuspecting retail traders? That's what we're going to figure out.
So here's how we'll break it down. First, we'll look at what made the launch look so perfect on the surface. Then, we're going to peel back the layers and see what was fueling the rally, what red flags were hiding in the data, and the airdrop drama that just shattered the community's trust. And finally, we'll connect it all to a classic market maker's playbook and give you the key takeaways so you can protect yourself out there.
Okay, so let's set the scene. It's March 31st. The Edge Token Generation event, the TGE, it goes live. And honestly, from the outside looking in, it looked like an absolutely spectacular textbook success. I mean, the numbers were just staggering. The price shot up from 5 cents all the way to a high of 74 cents. We already saw that insane volatility number. The trading volume just exploded past $248 million. And get this, within just 5 days, Edge had already broken into the top 100 cryptocurrencies by market cap, a perfect rocket launch.
But, a rocket like that, it needs a whole lot of fuel. So what exactly was driving this incredible hype? What was creating such intense pressure to buy?
And this is where it gets really interesting, because it all felt so coordinated. It wasn't just one thing. On the very same day the token went live, major exchanges like Bybit, BitGet, and HTX all announced trading pairs, and they even threw in massive prize pools to get people trading. On top of that, on-chain data shows the project itself moved $50 million from market making. And at the same time, huge whale wallets were spotted just scooping up tons of tokens. It was literally the perfect storm, designed to create maximum FOMO.
But while all this frenzy was hitting its peak, some analysts started digging into the on-chain data. And when they looked just beneath the surface, past all that hype, they started finding some, well, let's just say some deeply concerning red flags.
Okay. Check this out. This was the first major anomaly. In a typical healthy rally, the 24-hour trading volume is usually somewhere between 10 and 30% of the total market cap. But Edge's ratio? A whopping 62.8%. I mean, that's more than double the high end of what's considered normal. It just screams extreme speculative churning, not real, sustainable investor interest.
As one analysis put it, this kind of activity suggests heightened speculative interest that warrants careful examination, which, is kind of the polite, professional way of saying, hey, something feels really wrong here.
And the warning signs just kept piling up. After the price hit a low, it staged this massive 137% V-shaped recovery in just 3 days. Now that sounds great, but recoveries that sharp without any healthy consolidation, they're often totally unsustainable. At one point, 71% of the entire circulating supply changed hands in a single day. That's a sign of frantic flipping, not long-term belief. And maybe the biggest red flag of them all? A massive 185% premium on its fully diluted valuation, which basically hints at a huge wave of selling to come as more tokens get unlocked down the road.
So the data was already flashing all these alarms, but the situation turned truly toxic when the project's own community just erupted in anger. And the source of this whole firestorm? A deeply controversial airdrop.
This little table here gets right to the heart of why everyone was so frustrated. You had users who had earned the exact same number of points in the system, but they were reporting getting wildly different amounts of tokens. Your average person might get half a token per point, while some allegedly favored or insider wallets were getting up to 11 tokens for the same point value. It just felt like the rules weren't being applied equally to everyone.
And the backlash was immediate and fierce. Crypto influencers, the KOLs, started accusing the team of front-running the airdrop and giving preferential treatment to their friends. So what was the project's response to this crisis of trust? Did they come out with an explanation? Nope. They just disabled the comments on their X account, basically trying to silence the criticism.
Of course, that move only fueled the fire, and it led one really prominent influencer to declare that the project, quote, never intended to build a project, but rather to set up a scheme. And that just captures the complete breakdown of faith between the team and the very community they were supposed to be building for.
So let's step back. You've got suspicious on-chain data, a betrayed and angry community, and a team that suddenly goes silent. When you piece it all together, the entire launch starts to look less like a genuine success and way more like a textbook example of a pretty well-known market manipulation tactic.
It's called a news manipulation trap. It's a classic playbook. Basically, market makers or insiders use a ton of positive news, like all those exchange listings, to create intense hype. This lures in everyday buyers, and once the price is pumped up high enough, the insiders sell their positions into that buying pressure, leaving everyone else holding the bag.
And if you look at the Edge launch, it fits this pattern perfectly. Step 1. Announce a bunch of exchange listings at the same time. Check. Step 2. Drive extreme FOMO and get unusually high volume. Double check. Step 3. Lure in retail traders who are chasing that parabolic move. For sure check. Step 4. Insiders sell into the hype. Well, all the data and the community backlash strongly suggest that this was the endgame all along.
So, what's the lesson here? What can we learn from this whole saga that can actually help you spot the next trap before you fall right into it?
All right, here's your checklist. First, check those ratios. If that volume to market cap number is crazy high, be skeptical. Second, beware the FDV. A huge gap between the current market cap and the fully diluted value spells future pain. Third, question the V-shaped recovery. Real strength is built on steady support, not just frantic bounces. Also, follow the community. If there's an uproar about fairness, it often points to much bigger problems. And finally, the oldest rule in the book: don't chase parabolic green candles. Wait for pullbacks.
Ultimately, the story of Edge leaves us with a really critical question we all have to ask ourselves. The next time you see a crypto rocket starting to take off, are you going to be an informed passenger who understands the risks, or are you just going to be the fuel that gets burned to push it higher for somebody else?